We are told that cryptocurrency is very innovative. Look at the incredible financial innovation of Enron and WorldCom, and reflect on the fact that I don't believe that Satoshi Nakamoto was innovative, but so was Charles Ponzi, and I think just as innovative. Just because something is new and hip does not mean that we should embrace it.
Imagine Cardano ADA on a battlefield, with all its solid fundamentals and potential serving as its army and weapons. Cardano is struggling to win, but it becomes a source of confusion when its bullish fundamentals force it to surrender. Okay, snap out of it. If we're not careful, that scenario might happen soon. The pains are outweighing the gains. Before you pin all the blame on Cardano ADA, remember that generally cryptocurrency was bad news in the first place. Right from the inception of Bitcoin, the US government has stood against it. There was a lot of hate as governments did not buy the idea of digital assets. Cryptocurrency is even a threat to central banks. A few years ago, the United States Congressman Brad Sherman called on colleagues to outlaw cryptocurrencies, noting that they threatened to disempower American foreign policy and diminish the rule of law. The crypto-oriented nonprofit firm Coin Center tweeted the remarks of the congressman. In his comments, Rep. Sherman explained that lawmakers must act preemptively to stop the threat posed by cryptocurrencies and thus outlawed their purchase by American citizens. He claimed that crypto's threat forebodes no less than the shakeup of Americans' geopolitical influence due to its political diminishing of the power of its sovereign currency. He said, "An awful lot of our international power stems from the fact that the dollar is the standard unit of international finance and transactions. It is the announced purpose of the supporters of cryptocurrencies to take that power away from us." Sherman noted that in many key global markets such as oil, clearing through the New York Federal Reserve remains critical for major transactions. He concluded the discourse by claiming that the results of cryptocurrencies would not only be to disempower the US foreign policy, but also the country's tax collection and traditional law enforcement, thus transforming both the domestic and global status quo. Back then, there were so many fears and arguments about crypto. As reported, Sherman even called for prohibition on the US citizens buying or mining cryptocurrencies, and remarked to supporters of the initial coin offerings that charlatans and scammers have always favored decentralized new enterprises. In March of 2018, he claimed that cryptocurrencies are a crook whose value lies in aiding terrorists and criminals. Has the sentiment changed? No. Recently, a European government likened crypto to drugs, which need to be banned. So for Cardano, it has a long thread of bad reports, and it might not end anytime soon. As Cardano turned red in May, data from crypto intelligence portal Into the Block revealed a disheartening trend for Cardano investors, with over 6.5 billion ADAs turning red. These tokens, purchased at price ranging from 37 cents to 38 cents per ADA, were causing losses for their buyers and holders. While examining the Cardano token price chart, it became evident that a significant portion of the trading volume was acquired, and during this period, ADA witnessed an 8.3% surge, climbing from 35 cents to a high of 38 cents. The buying frenzy was wild, with more than 160,000 addresses adding Cardano tokens to their portfolio with this price range. This is what happened, and investors likely anticipated that the bullish momentum would continue. But unfortunately, they found themselves caught in the losses with billions of ADA coins in their wallet. At that point, it appeared overly optimistic to expect those investments to turn profitable. While the surge might have fueled hope, market dynamics rapidly changed, catching many investors off guard. So 90% of ADA investors witnessed losses. The trouble did not end there. Recently, Dogecoin, the meme-inspired cryptocurrency, has surged ahead of Cardano in market capitalization, following tweets from billionaire Elon Musk, according to data from CoinGecko. Doge, which increased more than 9%, now stands as the 8th largest cryptocurrency by market cap, pushing Cardano to the back seat. The ascent of Dogecoin followed a cryptic tweet from Twitter owner, seemingly connecting Doge and Twitter's new logo, shared by a Dogecoin designer. According to reports, Twitter's famous bird logo was briefly replaced by Doge, the Shiba Inu dog face associated with the meme-based cryptocurrency, in early April. Also, the hint of Dogecoin integration into Twitter's payment system piqued investor interest and sparked the recent rally. However, it remains to be seen whether this rally will have wings to fly. Dogecoin's resurgence comes amid a broader digital asset market showing mixed results. Data revealed that Bitcoin fell to the sub-$29,000 levels, while Ethereum and Binance Coin held on relatively steady. Cardano saw a decrease to 2.3%, dropping its market cap below that of Dogecoin. This development underscored the influence of prominent figures such as Musk on the volatile meme coin market. However, while the controversial Twitter owner is not abandoning Dogecoin, the meme coin is still down 90% from its all-time peak in May of 2021. At least the casual mentions and hints by Musk are unlikely to ignite another significant rally. But will time be enough for Cardano to get back on its feet? But moving forward, Cardano has witnessed a significant dip in its value, negating almost 70% of its recent gains. The losses followed a strong rally that were sparked by positive court decisions which favored XRP in its case against the SEC. In a ripple effect of the legal verdict that created a wave of optimism in the crypto market, Cardano previously experienced a significant upswing with its value soaring over 27%. Traders and investors across the board showed a renewed faith in digital currencies, with ADA being one of the prime beneficiaries of positive market sentiment. However, this growth melted like wax as Cardano soon found itself caught in the whirlwind of market volatility. Within a brief period, ADA saw a sharp downturn, relinquishing about 70% of its newfound growth. The precise reasons behind this sudden reversal are plenty, suggesting the complex and often unpredictable nature of cryptocurrency markets. While it's usual for digital assets to witness such fluctuations, the scale of Cardano's decline was notable. This loss indicates the weakness of gains built on sentiment-driven rallies, which can quickly reverse in the face of changing market dynamics. This and many more scenarios have made investors rethink and reweigh their options about Cardano. Things got worse when the SEC came after Cardano in June. However, this is not completely Cardano's fault. It is struggling to survive in a cold and sentimental crypto environment and has even attracted a lot of hate. So a question that we ask is, will it continue to fail? Well, it won't. And this is where the good news comes in. Cardano has yet celebrated another fantastic milestone of continuous uptime, reinforcing its position as one of the most stable networks in the cryptocurrency industry. A Twitter user identified as Dave draws attention to the latest Cardano milestone and unparalleled uptime on social media. Cardano has a current uptime of exactly 2,129 days. That is 5.83 years with no downtime, he stated on Twitter. As a matter of fact, exactly what he said was, Cardano has a current uptime of 2,129 days exactly. That's 5.8 years with no downtime. Built to last. An uptime the largest service providers in the world cannot and will never come close to challenging. Research wins. We are Cardano. Choose Cardano. Well, the blockchain's continuous uptime is most likely attributable to Cardano being one of the most actively developed chains in the entire industry. In a new tweet, Santiment listed the top 10 crypto assets by development activity with notable GitHub commits in the past 30 days. Cardano ranks third after Polkadot and Kusama networks, with 450.9 GitHub commits showcasing the development activity in the past month. Plus new releases on the horizon, one of them being Mithril, a stake-based signature protocol that improves the speed and efficiency of node syncing time. According to Cardano's Input-Output Global, the deployment of the mainnet infrastructure for beta launch of Mithril has been completed. Cardano's Web3 wallet Lace has also teased new developments on the horizon. The previous week saw a release of version 5.3.0 for Daedalus, which brings support for new Project Catalyst registration process and improves the stability of exchange rate conversion features. The real good news is that the underlying fundamentals at Cardano are better than they have been in some time. This explains why Cardano was up 80% earlier this year. Investors saw the real substantial efforts being made to boost the long-term growth prospects of the blockchain. A good example is decentralized finance, an important sector of the blockchain world where Cardano has historically lagged behind market leaders like Ethereum. We've been talking about it for some time now, and at the same time, key metrics used to measure DeFi strength has started spiking to new highs. Currently, Cardano's TVL has hit the $125 million level, which is the equivalent of 500 million Cardano tokens. Yes, the regulatory outlook for Cardano is unsettling right now, and yes, the broader macroeconomic situation shows few signs of improving over the next quarter or two. But if you look beneath the surface, the numbers in Cardano's reports do look promising, and eventually its strong fundamentals would speak for it, and they won't cause it to surrender, so if I were you, I would scrap that imagination. But that's going to do it for today's video. Make sure you click on the subscribe notification buttons, and we'll see you in the next video.